Hello traders, Nick Shaheen here looking at Apple. And to answer the question, is this a good time to get long Apple? So if my brother comes to me today and say, hey, I just got a pile of money, I'd like to invest it in Apple. Is this a good time to invest in Apple? My answer would be no. To invest, no. To trade, you can trade it. But as an investment, let me say it first and I'll backtrack into it. It is not an obvious place to get long Apple. Don't get offended. If this offends you, you're too emotional about the stock. I guess maybe I should have started with the fact this is not an expensive stock. Are you happier now? This is not an expensive stock. It sells at about a 32 PE, I think, trailing 12 months. So it's actual PE, no fantasy, and price to sales of about 8.5, which are very in line with the rest of the mega caps, if not cheaper. But if you think about Apple this time, like 3 or 4 months ago, that was 18, maybe 4 months ago, maybe 5. So recently, let's put it that way, it used to be 18. So relative to itself, it is more expensive. I understand the fact that it's changing, that it's changing the balance of income from completely dependent on the iPhone sales, or hardware sales, I should say, to more services, which allows it to run higher multiples. I get it. But I don't think the turn was this fast. Nevertheless, it's still cheap. It's a great company, and it's not a short, definitely. It is shortable for a trade, but you have to pick your lines and the overall picture. But it is definitely not an obvious place to start an investment, at least not a full-size position. Just look at the stock. It looks, whatever the name is, this, if somebody shows you a stock like this, hey, you want to buy this company? I probably wouldn't, because I'm looking back and I don't see any instance of this holding. It has to come back and check. It has to shake out the weak hands. The people that bought it here got 10 times their money already, especially in options. They're quick to close. So you need that to happen. So it needs to come back. It always comes back to retest the neckline from which it breaks out. For example, right here. Okay, so they failed and then they broke out. They tested for footing. Look at this. Nice test for footing. They go. And then they give it all back. Totally okay. Test for footing again. And look what happens. But to do this and don't come back and test for footing anywhere, it's just frothy. It leaves it susceptible to checkbacks. So, man, it just sounded like freaking Carter Worth. Sorry about that. So here's my problem with this. So let's say the QQQ. Whoops, where is it here? QQQ. All right, so the QQQ, I'm going to go to a weekly to show you where we're at. So this is 5 years worth of data for the NASDAQ. This was the all-time high. This is the all-time high, and we're setting records. This in the face of the worst freaking economic conditions on the planet. We've never had it this bad everywhere. We've had sustained over 10% unemployment in the U.S., way more. They just don't know how to report it. And we have 16 million unemployed people in the U.S., and yet here we are. But they say that, hey, the NASDAQ stocks are different, the high-tech internet stocks, not internet, cloud stocks, services, whatever, they're going to win regardless. That's okay. Let's go to the SPY. Okay, this is the all-time high. We collapsed. We came back to it like there's nothing. And now we want to do more, even though the shit that happened here is still here. COVID is still here. The country, half of it, well, giant parts of it are still closed. Tons of people are still unemployed. The whole world is still dying. And we want to do more? It just doesn't make sense. It's not intuitive. So that puts pressure on Apple, or at least adds extrinsic risk. Is that a word? I just used it. Apple. So you can't just trade Apple in a vacuum. It's fantastic, but you can't trade it in a vacuum. It's inside a stock market. So if the stock market corrects, then this one will fall to no fault of its own. So the answer is, for an investment purposes, this is not an obvious place to load up long on Apple. I'm not saying short it. I'm just saying, why not wait out a few ticks? Now, if you're an active trader, then you can get more granular and trade the patterns. For example, today, I don't know if I said that already, it's August 13th. Today, Thursday, there was quite a few triggers upside here, and then the downside here, head and shoulders, that has this target. So the first level to look at on a short-term basis is you want 456 to hold. I round a little bit. It's actually a little bit higher, but let's call it 456. If that fails, it falls into a support zone, short-term support zone, and they fill this gap. And then that zone, if it fails, I expect good support around 445, 46. And if they fail that, then they'll fill this gap right here. I know it looks like, oh my God, but it came so fast. These are 5-minute ticks, people. Okay, so in 5 minutes, it went from here to here. It had a 6% rally in 5-minute increments here. So it's accelerated. This is not usual. This is unusual action. This zone, this is 15-minute candle. So this zone here becomes relevant. And the most relevant line of all of them is right here. And it's 438, 430, let's call it 436, 435 for round numbers. And look, there's a gap right down here. So you see, it looks like a disaster falling from here to here on a 5-minute chart, but this is when? This is the 4th. 9 days ago, it's 11% up from 9 days ago. So it's not the end of the world. And by the way, if it falls 10%, that would be a full-blown correction per Wall Street terms. So 10%, let's say if it comes down to here, just low. If it comes down to 415, it would qualify as a correction, full-blown correction. Okay, so let's go to 2-hour chart. This should give us some perspective. All right, so let's see. That's that first level we talked about and the gap. And then a cluster of action I expect here. This candle is telling of the range that lies below this level and this. So you can see there is quite a bit of action up here. And you can see a ledge right there. Right there. This is good. When they break out and they test for footing, I assume the footing will hold until it doesn't. And when it doesn't, they're going to do this. I don't know when, I don't know how. They're going to have to get back here somehow. Maybe this way, bounce off of here in a couple of days and then lose this way and then come back up. I don't know. But eventually they're going to have to taper this and come back and just fill this void. Nothing happened here. That usually, Wall Street doesn't like that. Charts, if you scour through thousands of charts, maybe you can pick out on your hand how many that look like this that never come back to it. Okay, Baba did it like years ago, but it's not usual. So this is important. So I'm going to draw a line right here. So this is 400. This is a good, nice round number. Plenty of support lines in between. I just showed you a whole bunch. Okay, so don't say, oh my gosh, you're so easy picking 400. I'm not picking 400. The market picked 400. They failed at 399 twice. Came back, failed, and then they burst right through it like there's nothing on the earnings. And they never come back to test it? Not likely. They will come back to test it. So I'm patient. I'll let them have a few bucks upside. Eventually, it's going to have a come to Jesus moment and come back and test, fill some of these gaps and test for footing. The ownership has to transfer hands from weak to better conviction. So people like my brother, which is, by the way, a fictitious statement there, will pick up what Portnoy is selling, basically. So the Robinhood traders will get out, get shaken out, and then the newer buyers will have better conviction because the risk just started. Okay, so this is the concept of saying it's okay to stay out of a stock when you're not sure. This is too much uncertainty for my taste on any given chart. Don't care what it is. I don't care what it is. It's just not an obvious entry point. Nick signing out.